Hi, I'm Emma Allen from Active Property Investing. I thought I'd share a brief market update because so much has happened in the last 12 months since COVID-19 really started to impact our economy. Some of you might recall commentary around property prices falling by up to 30%. But for something like that to happen, it means that homeowners need to be under so much financial stress that they're willing to sell that far below market value, and that just didn't happen. Fortunately, we had our government release a series of incentives and measures to be able to provide some level of stability in our economy. And that meant we had more time to get the health risk under wraps as well, and also find a new way to be able to operate in this new environment that COVID-19 has imposed on us. So the property market only slid back ever so slightly between March and September of 2020. A lot of people were talking about a fiscal cliff that was supposed to happen in September when measures were withdrawn and property prices would fall so they'd get in for a bargain. But the number of people that talked to me about jumping in September was already an indication that buyers were going to return to the market in full force, and they did. Incentives like the First Home Buyers Grant put a timeline on how quickly people needed to get into the market, but it was such a great cash grab that, a lot of people that didn't have a deposit now had an opportunity to make the most of that. And so the level of buying activity was extremely high in comparison to the level of stock that was hitting the market from both a new supply perspective as well as an existing property perspective. There just wasn't enough supply to meet the levels of demand. And so by the time you get into January of 2021, after a really strong quarter, these incentives got extended, and it meant that there was another quarter, 3 months, of really strong, intense buying activity and competitive activity, which saw even more people jump in, like investors, and potentially FOMO, people fear of missing out, because the property prices were starting to move at such a rapid pace. In March, we saw the fastest growth in a 32-year history across the capital cities at 2.8%. By the time these incentives started to be withdrawn or expire in March, April saw a slowdown of activity or slowdown of growth to 1.8%. But that is still an increase nevertheless, but perhaps a much more sustainable rate of growth than the crazy madness of the months leading up to March. So interestingly enough, September became the bottom of the last property cycle. And since then, we've grown by 10.2% across all the capital cities. That's a significant growth for what was initially predicted as a big fall in property values. So the budget comes along and there's a release to again help people with their deposits. 5% for first home buyers, 2% if you're a single parent, accessing your super earlier. But having a deposit isn't the only thing that you need to be able to get into the property market. It doesn't address the issue of housing affordability, which is the slow rate of wage growth compared to the fast rate of property value growth. So where can someone who has a deposit be able to buy? It means at this point in time, if you're trying to get into the market, you really need to start thinking about compromise. Are you looking or prepared to be flexible on the type of property, the location, the age, the price point? What is it that you can be flexible on? Because to get your foot on the property market at this fast pace, you really need that level of clarity. It may even mean that you might consider something like rent vesting. Myself, I started as a rent investor because it was the way for me to get onto the property ladder. And many people like myself have been able to build portfolios based off that first step. So whatever it is you're trying to achieve through property, there are lots of questions that need to be asked, and if you're not sure what they should be, then please feel free to get in touch with our team. Have a chat to us, send us an email, and we'll do our best to see if we can help you.